It's just a metal, a soft yellow metal that doesn't rust, doesn't age, and yet for thousands of years people have killed, conquered, and built empires for it. Gold isn't just a resource, it's a symbol, a currency, and a weapon in the world of finance. But have you ever wondered who truly controls gold, and why this one element still holds so much power over the global financial system? Gold's story begins with humanity's obsession with its beauty. This fascination dates back thousands of years to the dawn of civilization and scarcity. From Egyptian pharaohs to Mayan kings, the lust for gold has shaped history. These ancient rulers adorned themselves with gold, not just for its beauty, but as a symbol of power and divine connection. And while today it's no longer used as everyday currency, its power has only grown. Gold has transitioned from a symbol of ancient power to a cornerstone of modern finance. But why? Why do modern investors, central banks, and even entire nations still depend on it as a financial anchor? The answer lies in its unique properties. Because gold, for all its simplicity, is security. It's a tangible asset that doesn't corrode or tarnish, making it a reliable store of value. In times of crisis, when currencies crash and markets falter, people rush back to gold. It's a safe haven, a hedge against uncertainty. It doesn't change, it doesn't lose value over time, and in an unstable world, it's a constant. Unlike paper money, which can be printed at will, gold's supply is limited. It's like holding a piece of financial immortality. This timeless appeal makes gold a unique asset, cherished across generations. But where there's demand, there's control, and that's where our story really begins. The quest for gold has driven exploration, conquest, and innovation throughout history. From the ancient trade routes to the gold rushes of the 19th century, the pursuit of gold has shaped economies and societies. Its allure continues to captivate us, making it more than just a metal. Every ounce of gold starts its journey deep underground, extracted by mining giants who control some of the world's richest deposits. These deposits are often located in some of the most remote and challenging environments on Earth, where the terrain is rugged and the conditions are harsh. The process of extracting gold is both labor-intensive and technologically demanding, requiring a combination of heavy machinery, skilled labor, and advanced techniques to unearth the precious metal. Companies like Barrick Gold, Newmont, and AngloGold Ashanti operate in remote, often politically volatile areas, places where gold is abundant and oversight is scarce. These corporations navigate complex geopolitical landscapes, dealing with local governments, communities, and environmental challenges. Their operations are not just about mining, they involve intricate logistics, security measures, and a deep understanding of the local socio-political climate. But mining is just one part of the story. The journey of gold from the depths of the earth to the global market is a multifaceted process that involves several stages and numerous players. Each stage adds value and complexity to the raw material, transforming it into a highly sought-after commodity. Once extracted, that raw gold enters a labyrinthine system of smelters, refiners, and traders. Smelting facilities melt down the ore to separate the gold from other elements, while refiners purify it to achieve the high standards required for market trading. This process ensures that the gold meets the stringent quality criteria demanded by buyers and investors worldwide. It's here, in the world's largest commodity exchanges, that the price of gold is truly set. These exchanges are bustling hubs of activity, where traders and investors from around the globe converge to buy and sell gold. The prices are influenced by a myriad of factors, including supply and demand dynamics, economic indicators, and market sentiment. The London bullion market and New York's COMEX exchange are the main battlegrounds where traders buy, sell, and speculate on gold, often never even seeing the metal itself. These markets operate on a vast scale, with transactions worth billions of dollars taking place daily. The trades are conducted electronically, with sophisticated algorithms and real-time data driving the decision-making process. These commodities traders aren't just playing with numbers, they're moving markets. Their decisions can have far-reaching consequences, affecting not only the price of gold but also the broader financial markets. They analyze trends, monitor news, and use complex financial instruments to hedge risks and maximize profits. They know that every geopolitical tension, every whisper of inflation, could send gold's price skyrocketing. Gold is often seen as a safe haven asset, a refuge for investors during times of uncertainty. As such, its price is highly sensitive to global events, from political upheavals to economic crises, and that power gives them incredible influence. The actions of a few key players can set off a chain reaction, impacting markets and economies worldwide. Their strategies and decisions are closely watched by analysts, policymakers, and other market participants. A single trade can impact currencies, stock markets, even government policy. The interconnectedness of the global financial system means that movements in the gold market can ripple through other asset classes, influencing everything from exchange rates to interest rates. This makes the role of gold traders both powerful and precarious as they navigate the complexities of a constantly changing market landscape. Physical gold used to be something only the ultra-wealthy or central banks could afford. It was a symbol of immense wealth and stability, locked away in secure vaults, far from the reach of the average person. But that changed with the rise of gold ETFs, exchange-traded funds. These financial instruments revolutionized the way people could invest in gold, making it accessible to anyone with a brokerage account. Now, anyone can own gold without ever touching a single gram. With just a few clicks, investors can buy shares in a gold ETF, which tracks the price of gold and offers a convenient way to gain exposure to this precious metal. The largest ETF, Spider Gold Shares, controls billions in assets, making it a major player in the gold market. Its influence is so significant that it can impact gold prices globally, reflecting the collective investment decisions of millions of people. But gold ETFs are a double-edged sword. While they offer easy access and liquidity, they also come with their own set of risks and complexities. They've democratized access, allowing millions of everyday investors to buy into the safety of gold. This has opened up opportunities for people who might never have considered investing in gold before. But they've also concentrated control. A few large financial institutions manage these ETFs, giving them significant power over the gold market. When people buy a gold ETF, they're often buying shares in companies that don't store physical gold for every investor. They're leveraging paper claims. This means that the actual gold backing these shares might be less than what investors believe. This means if the system wobbles, not everyone might get their gold. In times of financial crisis, the demand for physical gold can surge, revealing the limitations of paper claims and the potential risks of not holding tangible assets. Therefore, while gold ETFs offer convenience and accessibility, it's crucial for investors to understand the underlying mechanics and risks. Diversifying with physical gold alongside ETFs can provide a more balanced approach to safeguarding wealth. While ETFs give regular investors access to gold, the real hoarders are central banks. The United States, Germany, Italy, and other countries keep thousands of tons of gold as a reserve, a backstop for when traditional currency systems falter. Gold acts as a silent economic weapon for nations. A nation with large gold reserves can use it to support its currency, stabilize its economy, and even exert influence on the global stage. When a country like China or Russia increases its gold holdings, it's making a geopolitical statement. In essence, central banks use gold as a hedge against one another and against the volatility of fiat currencies. So why do people cling to gold during economic crises? Because gold is a hedge, a shield against inflation. When the cost of goods goes up and the value of cash goes down, gold often rises in value, balancing out the losses in other investments. Investors turn to it as a safe haven, a financial life raft. It's a system that's been in place for decades. When inflation eats away at cash, gold becomes more attractive, and investors pile in, pushing up the price even further. But who profits from this volatility? The traders and banks that buy low and sell high, those who know the game before anyone else. Gold is often touted as an impartial store of value, but in reality, the price of gold isn't just about supply and demand. It's shaped by the actions of a few powerful players. Hedge funds, investment banks, and even governments manipulate prices for their own benefit. Scandals have erupted over traders caught fixing gold prices, manipulating the London Gold Fix, and profiting from the system while investors pay the price. But these scandals often fade quietly, with fines that barely dent the profits of the companies involved. In a world where digital assets and cryptocurrencies are on the rise, some say gold's days are numbered. After all, it's heavy, expensive to store, and yields no dividends. But even as the financial landscape shifts, the allure of gold remains. It's not just an asset, it's an ancient promise of stability in a chaotic world. Will the digital age bring an end to gold's power? Or will this precious metal continue to wield influence over economies and governments for centuries to come? If history has taught us anything, it's that gold is a player that refuses to be ignored. In the end, gold is more than just a commodity. It's a symbol of power, wealth, and survival. And as long as we live in a world of uncertainty, this soft yellow metal will continue to shape our future and hold us in its thrall. Subscribe to Knowledge Drops for more revelations from the hidden side of the financial world. Gold has been a symbol of wealth and power throughout the millennia. From the ancient civilizations of Egypt and Mesopotamia, where it was used to craft intricate jewelry and artifacts, to the Roman Empire, where it was minted into coins that fueled the economy. During the Middle Ages, gold was sought after by alchemists who believed it held the key to eternal life. In the Age of Exploration, it drove European explorers to the New World in search of riches. Today, gold continues to be a valuable asset, used in everything from electronics to investment portfolios. Its enduring allure and intrinsic value have made it a constant in human history, a metal that truly moves the world. Pause 3S. Thank you for watching Knowledge Drops. If you enjoyed this journey through the ages with gold, hit the like button and subscribe for more deep dives into the hidden side of the financial world. Until next time, stay curious.